Welcome back, everyone, to another one-on-one with Jerry Hall. Today, I am excited to sit down with Mr. Grant Williams, co-founder of Real Vision Finance. Excellent source of market content, thought, principle. I mean, it's one of my absolute favorite sources of content on the internet, bar none. But with that being said, Grant and I sit down and have an incredible conversation about principles, about dynamics, about markets, about just ways of thinking about things. I think you're going to find this conversation extremely unique in the Grant Williams library of content available on the internet. It was absolutely a joy to be a part of it. I hope that you get something valuable from it. I know I sure did. So let's get right to it, right after these incredible graphics. Roll the graphics. So Grant, so wonderful of you to take some time to chat with me today. How are you there on the island?
Well, Jerry, I'm good. We're recording this a little later than we'd hoped to, and that's all down to me, so I apologize for that. But we're here, and it's great to get a chance to talk to you.
It really is. Now, I had the good fortune of about a month ago interviewing Raul, and he was there on Grand Cayman, on his house in Grand Cayman at that particular time. And one of the things that we didn't bring up that might be kind of interesting to talk about now is with the quote unquote kind of shutdown of not only, restaurants and this, that, and the other thing, I'm wondering on an island, how much of your supply chain disruption is going on as a direct result of, the kind of the global crisis?
Yeah, look, that's. I mean, I think for somewhere like Grand Cayman, that's a key question because, the advantages of being here is that it's small. There's 50,000-60,000 people here, so it's small. It's a manageable population. They can shut the island down, which they have done. They shut the airport 10 days ago for 3 weeks. I suspect they'll extend that. They took the cruise ships out of the equation a week or so before that, so they can shut this place down really easily. They can manage it pretty easily. The problem will come. If we have a problem, it will be because supply chains get disrupted. If there's a problem with food coming onto the island, for example, that's going to be the Achilles heel of someone like the Cayman Islands. So far, I have to say the government's done a tremendous job in acting quickly, acting pretty forcefully, and taking what initially was seen, I think, as quite draconian measures. But they've turned out to be ahead of the curve, and so far they had one case who died here of the virus, sadly. Talk about the perfect Venn diagram. He was an Italian man who came off a cruise ship. So it's the intersection of at the time the two big hotspots. So they then had to test a lot of the nurses. But my understanding is they've had a handful of cases here, and they've done a pretty good job managing it. But you're absolutely right. Those supply chains here, food particularly, is the unknown. So far, everything's been fine, but that's a real Achilles heel.
Right. Well, I had the good fortune when I got out of the rat race in 2015. It was September 2015. Liquidated the home, the cars, the motorcycles, all the toys, all the stuff. I got my life down to 400 pounds, and I went to the big island of Hawaii to learn about permaculture, aquaculture, sustainable organic farming. And I had the good fortune, of living on the island, what living on an island is like. And truth be told, if you can grow your own food, you really don't need much.
Yeah.
You know what I mean? And so, people ask me, how should we prepare? Like, I got some folks in Hawaii, how should I prepare? I said, if you're not living off your land already, you should have some seeds. You know what I mean? And watch some YouTube videos on how to grow some lettuce and how to grow sprouts. These are things that go from seed to nutritious, edible food within anywhere from 7 to 30 days.
Yeah.
And you won't die of starvation while you're waiting for your stuff to grow. Other stuff takes longer, but etc. So it's always good to have some of that stuff around when you live on an island that is supported by, boats and planes to bring you 99%
Yeah.
of what you consume. Yeah.
Well, it's funny. We talk about this stuff now, and in the here and now, it all makes perfect sense, right? But you had this conversation. You had this conversation 3 months ago,
Uh-huh.
and people think you're a doomsday prepper, right? And that's the one thing that I think is the biggest lesson that people should learn with what's going on right now, and that is just how fragile the entire system that we've built around ourselves is at every point.
Mm-hmm.
When you can have places shutting down for a week and unemployment claims go up to 3.25 million people, when you can have supermarkets running out of stuff and people fighting over toilet roll 2 days after a lockdown starts, it just tells you how fragile the system. Obviously, we've seen how fragile asset prices are, stock markets are, everything. And that fragility is something that the circumstances are addressing in the worst possible way. We would
Right.
hopefully take a look at them and try to address them. And part of that, to your point, right, is food. People haven't thought the way you think, because it seems like such an extreme move in an age of abundance to go and live and grow your own food and do that kind of thing. But now here comes an event comes out of the clear blue sky, and it's going to make a lot of people think similarly to you. And that can ultimately, post virus, when I think the world's going to be very, very different, that can only be a good thing.
Well, I'll tell you what, I'm hoping so. What I've told people, I mean, while I was living in Hawaii, it doesn't take but $150 to get a nice assortment of some good heirloom seeds. And if you think that you might lose connectivity with the world, then go download ahead of time a couple of these. There are incredible farmers putting out content
Yeah.
of how to grow microgreens, which are sprouts, in 7 days,
Yep.
how to create great lettuces in 30 days. Just a couple of simple things like that. It doesn't take but 20 minutes of your time and $150 of resources to invest in. What if something happens? It's not,
Yeah.
I don't think a doomsday prepper type of thing. I'm not that kind of person, but I'm also, I was a Boy Scout when I was a kid. I was taught to, plan for the best, but also
Be
prepare
prepared.
for the worst. You don't know, right? We've lived through shocks. I remember 9/11 was a huge shock. Nobody ever thought our country would be attacked again. Yet, hey,
Yeah.
guess what? It did. And so I don't think it's extremist to say, a little bit of, preparation is not a bad thing. And maybe this will wake some people up.
Well, look, we humans are extraordinarily resilient. I mean,
Mhm.
look at what the human race has been through, right? I mean, everyone's comparing the coronavirus to the Spanish flu, which killed millions of people. But hey, we got through that, and we've gotten through world wars and everything. So we, as a species, are incredibly resilient and incredibly adaptable, and in many cases intelligent. But the system which we have constructed has, over time, everything has been done to make it easier and simpler and cheaper. We've taken those shortcuts on a systemic basis, and that has created the problems that we're seeing now. We've created a very fragile system, and it was due a reset. I think the coronavirus is a catalyst. It's not the problem itself.
I agree.
Um, but we're in this now. We are now in the process of a reset beginning, and what that looks like on the other side, it's too early to tell. It'll look different, and I think when one system ends, you have to assume that everything that was a component of that system, whether it is just-in-time supply chains, whether it is outsourcing, whether it's low interest rates, whether it's binging on debt, all those things, if the system changes, the chances are they will all be repudiated, and you move into a very different world, which means inflation, which is one of the big things I've been talking and writing about recently. It's been a bugbear that's been hanging over the world for a long time, and it's been falsely called on a number of occasions. But what we're seeing now, it's very difficult to come up with a scenario where this isn't inflationary now, particularly where this trillions of dollars of printed money is going to go. And if we just get a change in the inflation deflation environment around us, everything changes. And so for us to talk about how you change from ordering your food from grocers online to growing your own sprouts, that's a big change. But I think that's going to be one change among many in a big macro change that's going to happen to the entire system.
I agree. It was, I'll tell you this, give you a quick background of me. When I came back from Hawaii to take care of my mother in her final months of her life, I had never put a tremendous amount of thought into how I was going to sustain myself. I have always been able to manufacture something, right? And here my mom dies. Mortality's something that is part of my consciousness, having just watched her pass. And I had very few resources. And I started thinking, okay, maybe I'm gonna look into finance. It's never been something. I've never been a big investor. I mean, I've dabbled, and I started learning. And one of the things that I came across early in this journey that started in earnest probably January of 2018 was Real Vision Finance. Now, living on a very tight budget, I couldn't afford a yearly subscription, which I would encourage anybody who should. I was consuming your free content on YouTube, and it was amazing to me to find such a wealth of information in an area that I thought I had an understanding of, and quickly came to the understanding that I know so little that I'm going to apply myself. I'm going to learn. And so that's what my journey for the last 2 years is. Fast forward to starting this channel in January, I've had the good fortune of having some very wonderful Real Vision contributors and guests come and talk to me, you being one of them, Raul, Mark Yusko, Jared Dillon, there's been a few others.
Yeah.
And one of the things that I'm starting to really get very clear about is, regardless of how much we all know collectively, none of us really have the answers. And that's kind of this journey, this fun journey, of like, soon as I start to kind of figure out one area, I realize that I really need to put some attention to some other area because it directly affects or has, inverse or adverse effects to what, right? So your particular, I don't want to say skill set because that would be misleading. The most content you've put out that I've consumed has been around gold.
Mm-hmm.
And I'm very curious. You made a statement. You coined a term, financial repression. You remember that?
I'd love to take credit for coining that term, but I definitely can't do that. But I think, it's a very real problem that people are facing.
I got it from you. I was hoping you could expand upon that a bit, because I don't think I could ever do it justice if I was trying to explain it to somebody.
Yeah. Well, I just want to go back to something you said there, because I think it's really, really important. And when you talked about making this commitment to learn, that's the big step that people need to make. And once you commit to trying to understand the world around you, it's extraordinary the things you find out once you decide to go digging for them. I remember in the early days of Real Vision, I was chatting to a guy in London who would eventually come and join us, and we wanted to hire this guy, and he was a creative, very, very talented creative executive, and we wanted him to come and join us. And I met him in London, and we sat down. We met at a cafe at St Pancras Station. I was going to get the Eurostar to France to meet my father, and so we'd arranged to meet for a coffee for half an hour, and he and I ended up sitting there talking for 2 hours. And he didn't know much about the financial world at all. I mean, his role at Real Vision was going to be on the creative side. And we sat there for 2 hours, he and I, talking. And it was a very busy station. And at the end of it, I said to him, how many people do you think have walked past you and I in the last 2 hours? We've had a guess, it would be in the tens of thousands. I said, how many of them do you think understand that the stuff that we talk about on Real Vision, as arcane and as confusing as it might be, directly impacts their lives? And he was taken aback by that. I said, look, it's your life, it's that guy over there, everyone in this station the world of finance is confusing and it's just difficult enough to keep people out, but it affects everybody.
Mhm.
And that for him was eye-opening, and he ended up getting really involved and going down that path and trying to learn about it. But I think once you do that, you do open up an extraordinary variety of avenues that you can go to understand the world you're living in. And when you talk to people, all the names you mentioned, Raul, Mark Yusko, Jared, these are all super smart guys. I mean, really absolutely brilliant guys and all good friends of mine. The thing about finance is we are all guessing about the future, right? Which is unknowable. So the best you can do is educate yourself to make the best guess you can about the future. And that's extraordinarily humbling because you can
Mhm.
read everything there is to read. You can spend, as I have, 35 years immersed in finance, and still things will happen on a daily basis in parts of the financial system that you think you understand, that you have no clue what's going on. It doesn't make any sense. And that keeps you grounded. It makes you realize that the best you can do is make an educated guess. So if you're going to have to guess about the future, which is unknowable, then you owe it to yourself to try and make the most educated guess you can. And that's a big part of what all this is about. What you're doing, what we're doing at Real Vision is to help people at least, if not have all the tools, at least understand the value of trying to acquire as many tools as you can, and understand the value in trying to learn from people who may not be better than you, but maybe more experienced. And this all comes down ultimately to experiences. And if you experience 2008, then you are ahead of the game with what we're going through now, because you've seen what can happen. If you experienced October 1987, Black Monday, then the day the market fell 12% in a day the other day didn't catch you by surprise. That was half as bad as the fall then. So it's about trying to take other people's experiences, learn from them, make them your own, and avoid making costly mistakes. That's really what it's about. It's a long rant, so I'll get back to your actual question about financial repression.
Well,
And
what you do,
that's,
hang on. Let me
yeah,
chime in
sure.
just for a second because it absolutely dovetails into what you said. So, as a direct, I've always, number one, I've always been a learner. So growing up, I learned how to play games. So whether I was playing football, basketball, baseball, I wanted to know the rules. I wanted to know how to get an edge or take advantage, right? But stay within the confines of quote unquote the rules, the law, what
Yeah.
have you. I spent some time outside the law, right? And I learned about that, got back inside the law, learned how to play in the system, got into construction, learned how to build beautiful things, right? When I decided I didn't want to do that anymore, I learned how to play poker, did that professionally for a while. I got an interest in nutrition, fitness, and things of that nature. I studied my ass off for years. Now I'm in finance. And so it's really just new topics. The process of learning
Yeah.
is incredible. And one of the things that I really appreciate about Real Vision is that it's not just this chart says this. Back when these other events happened, these were what the charts look like. It's nothing like that. It's like you provide, this is how we think. And when
Yeah.
you learn how somebody thinks, I have a very good understanding about how they learned. Like, for instance, an observation about Grant Williams. I could be totally wrong. I've never researched you beyond watching Real Vision, but my guess is that you've had some extremely influential teachers who have taught you A, B, C, and D. And the reason I say that is because the way you explain your mindset and the way you think about things is like a teacher teaching a class. And
Well,
I
look, it's interesting.
go ahead.
From my standpoint, I've always looked upon everybody as a teacher. Whoever I've been around, whenever I've sat next to people or worked for people or worked with people, I've always considered everybody a teacher. And I'd much rather listen than talk. I've never learned anything hearing myself talk. I've said that a number of times, but when I listen, there's always something. And so, I think a lot of it just comes down to paying attention to people, to being curious and asking questions. And that's a big thing in finance. There's a stigma to asking questions, I think, when you're inside the financial industry.
Interesting.
There is a certain stigma about it. I think you feel like you're expected to know a lot more than you perhaps should. So being that guy who's not afraid to say, hey, I should probably know this, but how does this work? You know, in the early days of Real Vision, I interviewed a buddy of mine in Hong Kong called Jay Chen, who's a very, very smart guy, very savvy investor. And I asked him for the best piece of advice that he could give people. And he'd said this to me actually over dinner, and I was hoping he'd come back with the same answer. I didn't prompt him, but I remember a dinner we'd had, and he'd said the same thing to me, and it really stuck with me. And sure enough, he said the same thing. He said, you know what, the best advice I can give you is ask. He said, if you ask someone something for help, for advice, for the answer to a question, you know, we as human beings, for the most part, are hardwired to try and respond and to try and help you. He said, if people can't help you, then they won't. But if it's within their power to, your instant reaction is to try and help people. And so, you know, I think asking questions if you don't understand stuff is so important. And yes, we've all kind of bluffed our way through stuff where we've kind of felt uncomfortable, thought, you know what, the answer he just gave me didn't, I don't want to answer the question again. We've all kind of bluffed our way through that. But if you ever get in that situation, then go ask somebody else. You know, if there's a question that you really don't know the answer to, ask until you find out, or read, or do something. But it's those questions that you kind of leave unanswered, and you figure, oh, that's probably not important. They're the ones that come back and bite you in the ass, you know, 5 years later, when you think, oh man, I should have asked. I had the chance to ask a guy who really understands this. So, you know, I think in terms of mentors, you know, everybody's a potential mentor if you're willing to just you know, stop talking and start listening. And that's, I mean, I've done that as much as I can for the last 35 years, and that's never going to change for me.
Music to my ears. That's exactly the context that I hold myself. I have, though, I'll tell you, with that mindset, I have found myself more recently than in the past having my opinion sought by others. And when it is sought, I'm glad to give it. Based on my experience, this is what I've read, this is what I know to be true, this is anecdotal, this is empirical, da 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 da. Here's my response to your question. You could find information that's contrary to that. I could be wrong, but I doubt it. So with that, with the last cherry on the top of that particular thing, before we get into financial repression, I've taken it upon myself, and I've gathered some friends, and we are putting together financial literacy content in Spanish for the 650 million Spanish-speaking population. Stuff as simple as the history of money.
Yeah. Well, that's simple and extremely complicated, right? I mean, it's a great place to start.
I've had some great models to look from. I mean, I think Mike Maloney did a really good job with this thing he did called The Hidden Secrets of Money. I thought that was wonderful. It helped me a lot. It sparked me to further research and further learning to really flush out some of the basic concepts or principles that he was outlining. I found it to be very helpful. I was able to take that and dovetail that into things that I've gotten from Real Vision that either enforce the narrative that I'm understanding, or become a contrary opinion to it, which creates more thought and more study and that type of stuff. It's been a wonderful project. I'm looking forward to being able to actually roll it out within the next 2 months. I honestly believe that if the population had a higher financial literacy, I think with information comes better choices.
So true.
And you're fighting that fight. I'm going to do my little part to fight that fight. If more and more and more of us get into that fight, I think the world will be a better place, because I think a lot of the population is playing a game that they don't understand the rules to.
Well, look, not only do they not understand the rules, but the rules for the most part are constantly changed to benefit the people who are running the game. I mean, it's like the casino, right? It just is. And look, you can twist that into all kinds of conspiracies. I mean, there's not much point going down that rabbit hole. But the simple truth is, it is an insider's game. And the language is kept just difficult enough for people to not really be able to understand it. I think the perfect example we have going on right now is the share buybacks, right? I mean, here is something. Let's take the airline industry, who are looking for a $50 billion bailout. Now, they've bought back over the last 10 years $47.3 billion worth of their own shares. Now, being inside the financial machine, you understand the incentives that drove them to do that. You understand why they did it, and a large part of that was enriching the executives that made those decisions. But the mechanism and the situation around share buybacks is just complicated enough that when you talk about it in the mainstream, people don't get angry enough. People should be an awful lot more angry about what's happened with share buybacks and the remuneration that's gone to CEOs of these companies. But it's just complex enough that the level of anger that is going alongside the story doesn't quite fit. It should be higher, and that's for the people running the game. That's okay, right? That's okay. So they keep these things as opaque as possible to dissuade people from trying to understand them. Because if people really did understand what's been done with this money with buybacks, they would be a lot more upset than they're going to be. I guarantee that. And so, the stuff that goes on in Washington, the bailout bill, you've got the private jet industry looking for a bailout. And even for people in the financial industry, that is causing a significant amount of opprobrium. But will that story make it into mainstream consciousness? Probably not. If it does and it gets picked up and it becomes a cause, it's a very easy one to rally around. But there is always that insiders setting the rules and trying to make the rules as accommodative to those playing the game on the same team. It's always been that way, unfortunately, and I honestly don't think that's going to change anytime soon. So people need to understand that, as you did, right? Work out where the rules are, work out how to play within the rules to the best way you can. But whenever you sit at a casino table, when you walk through those doors, the house has an edge, right? That's why they're all so big and so shiny.
Good point. Good point. And I'll tell you here. So I lived through 2008. I love movies. The Big Short comes out. I watch The Big Short. I get this thought in my head. Okay, I get it. I totally get it. I follow Real Vision. I'm learning things. I see this incredible corporate debt bubble. Okay, I need to figure out how does the mechanics work to learn how to short some of these things that I think are going to absolutely take a poo-poo. There are companies in the world that I think they defy logic, Tesla, blah, 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 blah. We don't need to get any of those, we don't need to go down that. But you understand the gist of what I'm saying.
Yeah.
And then I catch a Real Vision interview with you and probably one of the most tenacious short sellers in the history of mankind, Mr. Cordes.
Mark Cordes, yeah.
Yeah. Oh, yeah. Well, do you know where you were on that interview? That particular location geographically was 1 mile away from where I grew up. I grew up right down the street.
Oh, is that right?
Yeah, I grew up in Sonoma, California. Anyway.
Okay.
Long story short, I'm watching that and I hear the story about a guy who's in the game at a high level, playing by the rules, and in the middle of the game, the rules got changed. Yep. And I thought to myself, there is no right or wrong. It can't be enforced. The rules can't be enforced because how can they? This guy just got absolutely screwed. He's got really no recourse other than to come up with billions of dollars to fight it legally. And we know who wins those games. It's just as crazy. So maybe I don't want to play that game. Maybe I'm going to just play a different game.
You're right. I mean, Mark went through a hell of a time, and what happened to him was extraordinarily unfair.
It was atrocious.
But he had to. Yeah, it was an absolute travesty. But he had to cope with it, and when you see that interview, I think it's out on. I think it's up on YouTube.
It is. It's incredible.
But
here's something real quick.
Yeah, go ahead.
Well, I was just going to tell you, before this interview with you, a friend of mine in the States who also has property in Costa Rica called me. We had a chat. I needed some information because I'm going to do something for you in a little bit. And I needed some help, and I got the help. And I said, what are you doing? And they go, well, I'm watching Real Vision. I'm watching Grant Williams interview Mark Cody's in Sonoma. And I went, I'm going to interview Grant in 15 minutes. And they went, no way. I said, yeah. So anyway, I did. Julia, there's your shout out. Go ahead, Grant. Sorry.
Well, I did. I'll never forget that conversation. Mark's since become a very good friend of mine. We talk often, and he's an extraordinary human being. And so I look at the brickbats thrown at him about evil short seller, and I know his motivations. I know how he does things. I know how he thinks. But that conversation, we were standing in the barn at his farm, and it's just me, him, a camera guy, and a sound guy. And when he was answering that question, Mark choked up, had tears in his eyes. I had tears in my eyes. The cameraman had tears in his eyes. It was extraordinarily powerful recounting of a traumatic time in his life at a period where he should have been doing well. And your point is absolutely correct. He didn't do well because they changed the rules on him. And so that is something I think, particularly now, that people need to understand. As we go through the period we're going through now, where markets are moving, double-digit percents multiple times in a week, the chance that the rules get changed are very real. 2 weeks ago, when the market was falling double digits every day, everybody was out crying, let's close the markets for 3 weeks. We then had 3 or 4 days where the market was up. All that talk stopped, right? Nobody was talking about close the markets. The volatility is the same, but when the volatility is going up, because most people are inherently long, it's not a problem. But you need to be ready for the rules to be changed. They will be changed, whether it's something small and foreseeable, like margin levels changing, which has been done multiple times, or it is closing markets, or it's banning short selling, whatever it may be. You have to understand that every day right now, you are at risk of the rules being changed. And so people need to trade accordingly. They need to position accordingly. And you need to understand that liquidity is everything right now. And even though the Fed and the Treasury are throwing everything at this in terms of liquidity, I don't know that the liquidity is enough to solve this problem, because we had a first glimpse of it with the initial jobless claims last Thursday. 3.3 million. You take that chart all the way back to 1950, 1960, and it doesn't even look like a real chart. It's almost farcical. We've now had multiple estimates of minus 30% GDPs this second quarter. The numbers that we're going to see are beyond apocalyptic. And for people to believe that the market is done falling and is now going to go straight up, I think is a very dangerous position to take, because if you just go back to 2008, which from an economic standpoint, we didn't see anything near what we're seeing now. And this is global. This is happening right across the world. So for the entire global economy to come to a standstill almost overnight is unprecedented. People are making the same assumptions that the liquidity that's being thrown in here will have the same effect as it had in 2008. The problem is bigger, but the liquidity is bigger, so it should all work out in the wash. I don't think that's even close to being true.
Well, let me ask you something. I need to jump in here real quick. You know far more about this than me, but every time I hear people talking about liquidity as a solution, to me, liquidity isn't anything without a velocity of money component. Without moving through the system, a number on a balance sheet to me doesn't do much. I mean, it's not. I don't understand. There seems to be I'm having a disconnect. Without a velocity of money component, injecting money in the system doesn't do. I mean, what does it do? I don't get it.
Well, look, it's not strictly true. If there's no velocity, then what you're not going to get is inflation. If the money isn't changing hands in the economy, and that's the problem they've had. If you look at the velocity of money chart, it's just falling off a cliff. And I suspect it'll go lower.
Right.
But injecting that money into the parts of, let's call it the system rather than the economy, because it's really not going into the economy, it's going into the system. It's going into places that buy assets, essentially, right? So while you've seen no headline CPI inflation, I mean, we can sit and debate all day long whether the CPI number is accurate. I think anyone that buys groceries every week can tell you it isn't, or pays rent or utilities can tell you that it's not. But let's put that aside for the time being. And let's look at the trillions of dollars of stimulus that have been applied since '08. You've had massive inflation in asset prices. You've had, condos in New York going up and trading for $200 million, right? Who are buying those condos? Well, they're the people that have had access to this liquidity and who've had access to assets. So yes, the liquidity problem freed up the system. It didn't help the economy out necessarily, other than to prevent the foreclosure cycle and the unemployment cycle that we were going into. But that money didn't go into the economy, it went into the system. And the people that are in the system who have the closest access to that money, which is why I think The Big Short did a tremendous job of Adam McKay describing a very complicated set of events in such an accessible way for people to really get their heads around. And it really did tell the story. The guys who were already rich got first bailed out and then made richer because they were closest to the spigots. And it didn't really help Main Street, except the people in Main Street who have 401ks, which is not a significant enough portion of the economy for it to have made an egalitarian difference. What's happening now, potentially, when businesses are going bust, people are being laid off and put out of work, this money now is going to have to go into the economy and not the system. And that's what we've got Congress talking about, sending checks to people. This is the helicopter money we've been talking about for so long now as an idea. It's here, and it's happened much quicker than I think people thought. And the effects that helicopter money are going to have are going to be completely different to the effects that the TARP and QE had. Completely different. And if people are using that same playbook, then they're missing the trick here, because it's going to different places. It's going to have different effects. And one of those is likely to be inflation. And that's something that we haven't had to deal with for 40 years. The last serious bout of inflation we had in the developed world was in the 70s.
I was going to say,
yeah. Yeah, which is literally a lifetime away, right? It's a generation away. There are people that don't remember it. I mean, I was too young to remember inflation. But I remember my parents talking about it, and I've done enough reading that I understand the dynamics of it. But anyone who's really under 50 today hasn't lived through inflation, except as the child in a household that was trying to manage those things, and so probably doesn't have a real-time understanding of it. So, reading back on the history of the 1970s is going to be a very important game plan to try and understand going forward from here, because what they're doing is finally, I think, going to be inflationary. We're going to have to get through this deflationary shock first, which we're seeing, but they will keep throwing money at this, and we've seen that, right? We've seen Donald Trump already having signed a $2 trillion stimulus bill last week. He's already out angling for another $2 trillion, and that's going to keep happening. They're going to keep throwing money at this thing until they solve the problem. But solving the problem with all that money in the economy rather than the system is going to create problems which are big problems.
Wow. How much of what we've just discussed falls under the category of financial repression?
Well, the financial repression part is really, I mean, the government are going to necessarily try to either prevent you escaping the system with your money, or force you into places with it where they think it will do the system good rather than you. So if you think about, the easiest way to think about it is the bail-ins. We saw in Cyprus, instead of bailouts, in Cyprus, they closed the banks and there was a bail-in. If you had deposits above a certain level, well, they took, I think it was 15%, 10%. They just took that money, gone. And when the bank opened, you had 10 or 15% less in your account than you had before, and you had to take that on the chin. And very quietly, whether it's the US or Australia, UK, bail-in laws have been put in place now that people, I'm sure, are completely unaware of. They don't really understand what they're on the hook for. But if you have money sitting in the bank above a certain level, if the system comes under enough pressure, they will close everything on a Friday, most likely. And over the weekend, it will be announced that anyone who has cash deposits above, let's call it $250,000, the FDIC insured maximum, is going to take a 10% haircut. And people are going to say, well, what do you mean? What does that mean? So, well, if you had 500 grand in the bank, 25 grand of it's gone. On Monday morning, when you got your bank account, you got 25 grand less, and that's just the rules now. And maybe you didn't read the small print, but they're there, and that's the way it's going to go. Whether it's something like capital controls, whether it's something like, I don't think this will happen, but we saw in 1933, FDR issued Executive Order 6102, which prohibited the private ownership of gold. Now, it was different back then. Now, a lot of people in the US, for example, own their gold in Singapore, or in Hong Kong, or other parts of the world. But they can stop that. Are they going to force pension funds to own a mandatory amount of US Treasuries in order to put a bid under the Treasury market? Who knows? But all of these new rules, all of these changes to the way the system works, are done in a way that will stop you from either keep you from your money or stop you doing things with your money that are in your best interest but are deemed in the best interest of the system. And so, again, this is why your seed analogy is such a perfect thing for people to think about. Growing your own food 3 months ago seemed like a crazy thing to do. Why do I need to grow my own food? This is ridiculous. It's a lot of time. It's a lot of effort. It's maybe expensive, as it turns out from what you said. It's not, but it's just kind of too much. When I can go down to the grocery store, I can get online, and have it delivered to my door. I don't need to do that. The same is going to happen with the financial system. Take a look at gold right now, right? Gold is the perfect example of this right now. If you'd wanted to buy a gold coin 3 months ago, you could have called 100 websites and picked up the phone and dialed all kinds of places. How many do you want? Yeah, spot price is this. If you want a coin, it's 1%, 2% over spot, which is pretty standard. No problem at all. And people will be falling over themselves to sell you those gold coins. Mm-hmm. We have 1 week of dislocation in markets. We have a tiny few days of discrepancy in the gold markets where the futures start trading way over the physical price. And not only can you not get a gold coin without paying probably between 10 and 25% premium over spot, but the people that have built businesses to buy significant amounts of gold, buying gold in bars, buying millions of dollars of gold for people. No, sorry, can't get you any gold. We don't know when we can get it for you. So right. People are asking the question, when's the right time to buy gold within the market context? And the answer to that was yesterday. The answer was the day before all this stuff, before the dislocations happened. It's the same with toilet paper, right? When was the best time to buy toilet paper? Well, it wasn't the day after people started fighting over it in the aisles. But if you started stockpiling toilet paper the day before, you walk out of that supermarket with a basket full of toilet paper, people are going to look at you like, this guy's some kind of psychopath. The next day, if you'd have walked out and stood outside there, you could have sold that toilet paper for 5 times the price. So being prepared for eventual outcomes is just good sense. If the outcomes don't come to pass, you've lost nothing. Whether it's by stockpiling toilet paper, you're going to use it. Whether it's stockpiling canned tuna, you can use it. Whether it's buying gold, it will always have a bid. It doesn't matter if it doesn't come to pass. But the day it comes to pass, if you're not prepared, I'm sorry, there's not a phone call you can make to get what you need. You just have to be in the same position as everybody else, whether you're scrambling over tuna fish, toilet paper, or gold. It's the same situation.
So have you ever heard about that show? It's called Who Wants to Be a Millionaire? And they have a section of the show where you can use a lifeline where you can call somebody, right? So we're gonna play that real quick. I've just been studying gold, the gold markets. I've got a question I can't answer. I'm picking up the lifeline. I'd like to call Grant Williams. Hey Grant, it's Jerry. I'm learning about this thing called rehypothecation. Is that similar to the banking industry's fractional reserve banking, or is that called gold leases? Help me understand. I want to get this question right and be a millionaire.
Same. It's the same thing. It's your assets are being pledged to other people as collateral. If you look at the simple way to do it is look at the number of ounces of gold in the COMEX warehouse, which are published every week. It's registered for delivery gold. And you look at the number of outstanding futures contracts, you'll see all of those futures contracts are a claim on the gold, and the chart will show you that when the market's in equilibrium, there are probably 50 claims per ounce
On the
of
same
gold.
single ounce.
Yeah, so for every ounce in the register in the warehouse, there are 50 outstanding claims. Now, the reason for that is most of the time the futures are just rolled over, or they're not. People don't take delivery of their futures contracts. So there is a point to which that's absolutely fine, right? There have been periods in the last 20, 30 years, a couple of times, where those claims per ounce have got up to 100, 200, 300, briefly, right? What's different this time is that there's been a big disruption in the supply. Previously, they were mainly demand driven, but now you have a genuine supply concern. And so when you realize there's a commodity that you can't get your hands on, but it can change the dynamics. And so we've seen a lot of stuff happen in the markets between London and New York. I don't want to get too technical on this, but basically the futures contracts in London and New York are for gold bars of different specifications. So in COMEX, there are 100-ounce bars. In London, they're 400-ounce bars. And there's a program between the two where people will net one off against the other. But what we saw this last week were people in New York desperately trying to deliver into COMEX contracts, and the only place they could get gold bars were in London. But guess what? They were 400 pounds, not 100. So you can't deliver what you're obligated to deliver. So the exchanges had to come up with a new contract very quickly that would allow people to take gold from one warehouse and deliver it into the other. That just tells you there's stress and strain in that system. And when you have stress and strain in a system whose underlying is a physical commodity, that's not something that can be printed and pulled out of thin air. Whether it's oil or wheat or corn or soy or gold, there is a physical commodity that has to be dug up out the ground or grown on a bush or fracked or whatever it may be and delivered into that contract. And so there is no solution to that, right? The solution may be force majeure. Maybe they can declare force majeure because of the virus. It's potential that would have happened had this gone on longer. It's kind of calmed down for now. But again, it's a warning. It's a warning shot of, look, my friend Simon Mikhailovich, who is one of the smartest guys I know and who's deep into the gold market, understands both the dynamics of the gold market itself and also its place in the system better than most, because he emigrated to the US from Russia back in the 70s. He described it beautifully to me. He said, it's like when you have a near miss in a car. You slam your brakes on, you come this far away from hitting another car at a junction. He said your heart's beating out of your chest, and the next 10 times you drive past that junction, your heart rate, your pulse goes up, and then after 10 times of driving past it, you haven't another accident and your pulse returns to normal. That's what happens with these things, right? Everybody's pulse gets up and everyone's nervous and everyone starts panicking and trying to secure their gold or secure their tuna fish or secure whatever it is. And then things go back to normal. And after a while, people get complacent again. And what we've seen in the gold markets is a very good idea of what happens if gold becomes short for whatever reason, or if we get an influx of people wanting to buy gold. And if we are moving into a period of inflation, and the people who are going to want to buy gold, the number is going to increase dramatically. And I did a presentation which your viewers will be able to find online. It was called Nobody Cares, and I did it in December 2015. So it was a lifetime ago now. But I talked about this exact same thing. At the time, pension funds had a 0.15% allocation to gold. And I posited what would happen if they doubled that allocation to 0.3%, which is nothing. There have been times when pension funds have had a 5% allocation to gold. If we get into an inflationary period, they could have 5, 10, 15% allocations to gold. And for that allocation of just pension funds, going from 0.15% to 0.3% would have brought $100 billion into the gold market, which doesn't seem like much when we're throwing $2 trillion stimuli around it like candy. But at the time, it was enough. I think you needed 169 billion, and you could buy every share of every major gold miner in the world. So we're talking that kind of delta in terms of change that this could move. And so either a supply shock, which we've seen, or a demand shock, which we've seen before, or two, which I think we've had a glimpse of this week, is going to change things materially. And anyone who doesn't have their gold or their tuna fish or their toilet paper when when this thing goes up is going to wish they bought it the day before.
Agreed. Oh, I'll tell you, and I don't know if I have not been able to decide if it's a good thing or a bad thing. I have access where I can buy gold, but I'm not taking delivery of physical gold. I'm basically, I think they call it a gold lease, is
Yep.
what it was termed to me. And I thought to myself, okay, I understand a contract, right? A legally binding contract to an asset. I totally get that. Just like real estate, right? Taking a mortgage on a piece of property, the bank has got legal title to that physical thing. Got it. What I don't get is, what if a person in front of me takes physical possession? What happens to my ownership? It's null and void,
That's
right?
exactly it. But
Yeah.
that's exactly
So,
it, right? Well, that's the problem that we don't have the answer to that question, right?
oh, but we built
Well,
a
no,
multi-trillion-dollar market around it.
well, we understand what's likely to happen, but it hasn't been tested. And until it's tested, you don't know how the
Okay.
rules get changed. You're going back to our former conversation. So
Right.
if that gold that's sitting in the bank, I mean, think of a bank run, right? You've got $1 of assets and they lend 9 times over on that.
Right.
And the people that put that money back in the bank, they lend 9 times over on that. That's how the whole fractional reserve system works. A run on the bank, when you've seen, there's some great photographs taken by a famous French photographer called Henri Cartier-Bresson, which were taken in Shanghai back I think after World War II. And there's a very famous picture. If you Google Cartier-Bresson Shanghai, you'll see a picture of what a bank run looks like. And it's people who are trying to, at that time, get their gold out of the bank. But it's just this mass of humanity with faces contorted and twisted, just desperately trying to get their money out. Now, the fractional reserve banking system is the same as the gold system. When the first guy says, hey, I want my gold, well, okay, that guy has to go into the market and get gold to deliver to him. And you just start those dominoes toppling. And somewhere at the end is a guy who says, yeah, I can't get any gold. So at what point does that occur? And at that point, what's your legal recourse? If the guy can't get the gold, what happens? I mean, I'm sure there are procedures in place, but if it happens because one guy has poorly managed his business, different problem, right? Because that guy will call in auditors, the auditors or the receivers will go out, they'll buy the gold from someone and they'll make good his obligations and the whole thing goes away. If this is a systemic problem, and so all the people who are short gold have to go and buy it, and there just isn't any gold, completely different ballgame. And we don't know how that will be administered because we've seen similar things happen. They're very messy, and by the time the outcome is determined, if you were one of those owners of gold who was waiting on delivery, well, sorry, pal, you'll get settled at some arbitrary price. I guarantee it won't be fair market value, and you'll just have to take that one for the team, I'm afraid. So, possession it's not even 9/10 the law. When it comes to this, it's 10/10 the law.
It's 10/10.
And if we move into that potential environment, then you better have, this is why ETFs are great. You want to own the GLD ETF? Great. It'll track the gold price as close as you really need it to. It's liquid, you can get in and out, fantastic. If you're owning it because you want exposure to the gold price, perfect. If you want to own gold, if you want to diversify your holdings into owning gold and you own the ETF. Now, again, there's a whole conspiracy rabbit hole you can go down as to whether the gold's there or not. Let's leave that aside. Let's assume on one day you decide you want your gold. There is a mechanism in the prospectus by which you can, if you have enough of them, you can only do, I think the minimum is $100,000. But let's say you have $100,000 in the ETF. There is a mechanism by which you fill forms in, you do this, you do that, you present it to the custodian, and to the letter of the prospectus, you will be given the gold, right? Now, the chance of you wanting your gold are going to be much higher in a time of dislocation or crisis. Unfortunately, that's the time everybody's going to want their gold, right? It also means there's a higher percentage chance that the market isn't functioning, or there's a bank holiday, or the custodians are closed, or the stock exchange is closed, and you cannot get your gold.
Right.
If you had your gold sitting in a depository outside the banking system, in private storage, secure storage, either down the street or preferably in another country, you can have access to that gold. most of these the businesses that set these things up 24 hours a day, 7 days a week, you can make the phone call, and you will have your gold delivered to you within a window, wherever you need it in the world. So the people, again, it comes back to what we keep circling back to the same things, but that desire to learn, the people that go the extra mile and do the thing that feels difficult, which is, okay, I want to own gold. Yeah, I've heard it's difficult. Like you said, people have heard it's difficult to grow seeds. It's not. People have heard it's difficult to own gold. It's not. It really isn't. Is it slightly more expensive? Yeah, it is. But you're buying insurance, you're buying a security of having that asset. And once you realize how easy it is, you think to yourself, well, if I've bothered to understand why I need gold, do the extra bit of reading to understand that why you need gold means you need physical gold with no counterparty risk that's unencumbered by anybody else. And that means owning it yourself outside the banking system and not through an ETF. All the while the price is going up, you will have access to that price. If you are relying on having that gold, the only way you can rely on having it is owning it in your own name, free and clear, outside the banking system. It's as simple as that.
Oh, I couldn't agree more. I mean, it's a heck of a lot easier to sell gold into a situation like we're experiencing right now than it is.
How many 1-800 ads have you seen at 3 o'clock in the morning trying to sell you gold?
Me, zero.
Right? They all want to buy it. It's we'll buy any gold. No one's trying to
Yeah.
sell you gold at 3 o'clock
For
in the morning.
For sure. You know, so I mean, obviously, I have questions because I'd like answers. I know there are no simple answers. I've come up with a few. So I have a couple solutions to all the world's problems. I'm going to run them by you, and you tell me if you think they could happen, or is there a chance of success, or probably not. The first would be, because I hear a lot of people present possible solutions, right? And I think to myself, okay, so there's a tremendous amount of talk about going back to a gold standard. And the thing that I keep coming up with is the only way that I think that could work is if the governments got together at a G20 meeting or something and said, okay, do we all want to do this? Okay, great. We're going to have to reprice gold to encapsulate all of our currency supplies out there. Let's get the accountants in here. Let's figure it out. Okay, here's the number. Well, let's say for shits and giggles, we'll denominate it in US dollars. This is it, bang. Now everybody, central banks have got this much. You know, everybody knows how much they got. We're going to basically be able to, you know, have parity with each other's currencies. We're going to do this. That seems like the simplest way to kind of get back to some kind of something. Or the other is same thing. G20 got together and say, listen, man, every one of us is up to our tits and shit in debt. This is crazy. We'll never be able to repay it. Why don't we just all forgive each other's debts? Let's have a little debt jubilee. We'll have a little party. We'll wipe the slate clean for everybody. Sure, there'll be some losers, but we'll be able to go forward. What do you think?
Well, look, I mean, there's two very distinct solutions, right? So let's do the gold standard one first, because
Okay.
only because I've done a presentation about this as well. It's called Cry Wolf, and if people viewing look for my name and search for Cry Wolf, you'll find this thing. And I talked about this exact thing. And you know, a gold standard is if you go back 200 years, you know, the entire history of the United States, you'll find that the US was on a gold standard for more than it wasn't on a gold standard. We just happen to have lived through the last 50 years when we've had a purely fiat standard, right? So, of course, the idea to us is unworkable. People will tell you it won't work, it can't work. But of course, it has worked for hundreds of years, right? The question is not, can it work? The question is, why would it come back? How would it come back? What would the conditions be? And in that presentation, you'll see, I went through that. And the mistake people make is, the mistake you just made, that the G20 will sit down one day and say, you know what, we need to go back to a gold standard. So how do we do this? Well, that's not how it'll happen. How it'll happen is freeze, the whole system's broken, stop. We have to go back to a gold standard. It's the only way we can reset the system. It's the only way. We need something because every asset is impaired, we need something to sit at the anchor of the financial system. It has to be gold or gold and silver, as we've had this biometallics down the past, or gold, silver, platinum, whatever it may be, but it will be physical assets, monetary assets that form the basis. And in the presentation, I talked about the things that you needed for this to happen. And, you know, one of them was political turmoil. Well, we've got that, right? Whether it's Trump or Brexit or all over Europe, you're seeing this populism. One of them was social unrest, which again, just Google riots over inflation everywhere, right? The one thing that was missing was a stock market meltdown, right? That's the one thing that was missing.
Unrest?
Economic unrest, right?
Check.
When you have those three things, then the conditions become right for a reset. And this is why so much time, money, and effort has gone into preventing the financial markets melting down, right? This is why Greenspan threw everything after 2000, which is a completely different type of bubble, but it's why everybody after 08 threw everything, did things that they had no legal right to do, but that was fine, we'll fix it later on. We have to stop this happening, because if we get another Great Depression type event, then all bets are off. And that's what this is trying to be. This is, you know, we talked about coronavirus being a catalyst. It's a catalyst for what began in 08, which was an unsustainable debt load imploding in upon itself. Well, you know, since then, what have we done? We've added $14 trillion of debt to the debt pile to try and keep this thing going. At some point, it's going to collapse, and maybe this is it. Maybe they find some way to keep it together. I don't know. I suspect the world after this is going to be very, very different. But that's what's essentially happening. And so when you get economic, political, and social crisis, and the system melts down, you need to stabilize it. And the only real way you can stabilize that is around something that is independent of counterparty risk. You know, if you look at Exeter's pyramid, which has gold at the bottom and then this increasingly risky pyramid of assets on top, we're working our way down that pyramid dramatically. And at the end of it is gold. So at some point, whether it's temporary or not is a different discussion. But at some point, gold will re-enter the monetary system, I believe. But it won't be a choice that's made. It will be in response to a situation that without returning to gold is unworkable. The debt jubilee is something wholly different. You know, and I've talked to people about how this can happen.
Hang on, Grant.
The only way, yeah.
Real quick. The whole debt jubilee thing came from me from one particular premise, and I forgot to say it, but I think it's important, and that is the debt jubilee. The reason we are not being able to raise rates is because servicing the existing debt is impossible. So the only way to get back to any kind of real fiscal responsibility, management of risk as it, you know, as it pertains to debt, is to have risk adjusted rates, and we don't have that. So that was my caveat. I'm sorry I didn't include it. Back to you, sir. Sorry for interrupting.
No, not at all. But you're absolutely right.
Say that one more time.
Is obviously that you said you're absolutely right. Right. The problem here is the debt has now largely moved up to the sovereign level. Right. It's gone from the individual to the corporation to the banks to the sovereign level, and so the more of it accumulates on the sovereign balance sheet, the easier it becomes for people to forgive the debts, right? Because if you say, right, these bonds are worth nothing, let's say we're going to wipe out our treasury holdings that the PBOC own and we own, we're going to net them all out. Well, all the banks that hold them as tier one risk assets, all the pension funds that hold them, what happens to them? Do they get made good? How does that work, right? It's a wholly unworkable thing. But the more of this debt that accumulates on the central bank balance sheets, the more of it they take out of the public sector and onto the private balance sheets. Let's say if they owned all the debt, which in Japan they've got a much better chance of doing, frankly. If they own all the bonds, we've had these ridiculous $1 trillion coin things with the treasury mints $1 trillion, blah, 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 blah. If they own it all amongst themselves, can they forgive it? Yes. Where you're going to see that reflected is in the currencies, right? What's the dollar worth if a treasury can get wiped out? If a treasury bill can get wiped out and be made worthless, what's the dollar worth, right? Because most of the people hold their reserves in treasuries. What's it worth? But if the Bank of Japan's doing the same thing with JGBs and the UK is doing the same thing with gilts and the Aussies are already doing it and Europe, blah, 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 what are any of these currencies worth? Well, there's only one thing they can all devalue against, right? It's
Right.
gold. It's the only currency that they can all devalue against. They can try and devalue against each other, and some of them will do better than others, and the dollar will do better than the yen, but they will all devalue
Right.
against gold, which is the only currency with no counterparty risk, with no debt laid on it. So, again, it comes back to gold being the anchor of the financial system. And the more people understand gold's role in the monetary system, I think personally, and people disagree with you, but for me, it's proved invaluable. The more you understand gold's role, the more you understand the financial system and how our modern day financial system is constructed, how it's evolved, and more importantly, why it's evolved the way it has. And I think it's inevitable at some point they will have to. It won't be a case of, oh, gold will be reintroduced. Gold will have to be reintroduced to the monetary system to stabilize it. They'll want to keep that period as short as they can, because when you have the discipline that a gold standard imposes, you can't go out and print $2 trillion and give checks to everybody. You just can't do that. So they'll want to keep that period of stabilization as short as possible. But something's going to have to come back to be at the center of the system. And to me, there's only a handful of things it can be, and gold will definitely be one of those.
Well, the thing that is very attractive for me about gold, and I'm I try to think and explain things as simply as I can, and tell me if I'm completely off base here, but the fact that it has no counterparty risk means that the market, the supply and demand market, will establish the price for it. And if your currency is tied to the gold, then the currency is only going to be able to float within the range that the actual free market determines the price to gold to be at. Now, that changes if the price of gold is set by a government or an authoritarian regime or whatever the deal is. I'm not really sure of all the intricacies of how that works, but I understand free market supply and demand principles, and I understand that inflation and deflation, if a dollar was attached to gold and the market said gold is worth more tomorrow than it is today, then that would mean we could either increase the currency supply or the purchasing power of that dollar will go up. And of course, there's the adverse to that. If the market said tomorrow the price of gold was lower than it is today, then obviously the purchasing power of the dollar would be lower, as it would fall in line with the price of gold unless you set the price of gold. Am I correct in thinking that would be
look,
the mechanics
if there's a gold standard of sorts, then there will be a reference price for sure.
Oh, okay.
But if you think that that let's say they decide the gold price is $5,000 an ounce, right? Which is imminently possible, right? Absolutely, that's a possible number, right? Some people can make a very good case why it should be $50,000 an ounce, and numbers in between, right? But let's say they pick $5,000 an ounce, right? And that's the price. So if you want to exchange an ounce of gold, you get $5,000 from the bank. If you go to a street market in Dubai with your ounce of gold, I'm willing to bet you'll find the market price there is not $5,000 an ounce. There will be someone who pay you $7,000 an ounce, depending on everything that's happening. The daily price on the street, where supply meets demand, like we see in every country that has currency controls, right? There's a black market price, and there's the official exchange rate. You look at Argentina recently, crazy difference. Venezuela, ridiculous, right?
Exactly.
And the same will be with gold. It'll be the same with gold. There will be a reference price, and that will be at the central bank level, what all these things are pegged around. But gold is a universal currency, and it's such an important part of so many countries where the central bank can't control what people do with their gold. Bangladesh, India, Vietnam, or anywhere basically east of Europe, gold plays a completely different role in society, in family and business finances, and in the psyche of people. And so, you try and confiscate gold in the US, there aren't that many people that own it. You probably be, I mean, FDR managed to do it in 33. You could probably do it again now. I mean, most people that own gold now probably own it overseas, and so you wouldn't get all the gold, but you could institute some kind of similar prohibition in the US without too much noise outside the financial industry, right? Where it would be seen as the big deal it is, but for most people, okay, ban gold. What do I care? I'm going to be gold. Try and do that in India. Forget
Yeah.
it. Try and do it in Vietnam. Forget it. Right? It just won't happen. And any government that tries to do that will be hounded out of office. And the amount of people who are going to turn their gold in voluntarily in the slums of Bombay are negligible to zero. So it's not workable. But for those people, let's say the price of gold goes to $5,000 an ounce, you can bet your bottom dollar that we will have significant inflation. The thing about gold is people get fixated on the price and what the price does, right? And we've had the perfect example in this last few weeks. The S&P fell 34% at its lowest point, right? The gold mining stocks fell 24% in the juniors and 18%. So they outperformed the S&P, even though they went down. That disappointed a lot of people. Gold was essentially up 1%. And everybody's sitting there going, gold was supposed to go through the roof. Why isn't gold at 2,000? At the peak of the market on February the 22nd, your 1 ounce of gold would have bought you half a unit of the S&P, right? Just dividing the two prices into each other.
Right.
3 weeks later, your ounce of gold, even though the price hadn't moved, would have bought you 0.64 of an ounce. So it's a 30% increase in your purchasing power had you chosen to go and buy an ounce of a unit of the S&P. So the gold price didn't move, but it protected your purchasing power, and that's what it's all about. Can I buy the same or more?
Go up relative.
Exactly right, and that's
exactly
the price is the wrong way to look at it. The price is a signal as to what's happening, but what will your gold? What can you exchange it for? Whether it's dollars, yen, pounds, houses, food, whatever. What can you exchange it for more today of that item than you could tomorrow?
That's value to me, baby. When if I can get a pound and a half more beans and a pound and a half more rice for the same unit tomorrow than I can today, I'm a happy guy.
Right, or the same amount of beans and you have some money left over. I mean, either way, right? That's what it's supposed to do. And through 6,000 years of recorded history, it's done that every time. It isn't as sexy as tech stocks. You can't check the chart every day and look at this thing going up. And when markets are on fire, it seems very boring. It seems like an asset that by holding you're missing out on all the fun. But look at what happened. Stock markets are back to where they were in 2016 in the space of 3 weeks. Yeah. So all the fun and games you've had with these tech stocks and FANGs and all this, it's awesome. And then you wake up one day and how many people were fast enough to get out of their FANG stocks and their 401ks? Most people not, except the active traders. And even then, they would have taken a significant haircut. Well, guess what? Gold's above where it was back then. And it will buy you can buy those tech stocks back and then some. So yes, you missed out on all the fun on the way up, but you haven't been through the kind of pain that those people have been through. And you have a chance now to buy the assets that are on sale using less of your capital. That's the way it's supposed to work.
It's absolutely brilliant. That is an absolutely wonderful analogy. I listen to a lot of people that I believe, that was an excellent analogy. My hat's off to you. I'm going to steal that and use that.
Use it with abandon, my friend.
I'm into simple, Yeah. If it's honest, the simpler I can make it, the more ears can digest it. The more ears can digest something, again, it's back to that whole better information, 9 times out of 10, 8 times out of 10, 7 times out of 10, that's subjective, but more times than not, better information will produce better results.
There you go. Better inputs, better output.
I'm looking at the clock. You have been extremely generous with your time. I did not.
Hey, it's the least I could do.
Put us on a timer. I hope I hope that I will be able to tap you again in the future at some point. You know, that maybe I could say, hey, Grant, would you like to come on again? Maybe 8 months from now, whatever type of thing. I just find you incredible. I want to let the viewers know that not only is a absolute shit ton of Grant's content available on the free Real Vision site, but also Real Vision is running a $1 promotion. For $1, you get 30 days unlimited access to their archive, which again, you can find a bunch more Grant Williams stuff, but also little known, nobody talks about this, but you're going to hear it right here on One-on-One with Jerry Hall. Grant Williams has his own YouTube channel. It's Grant Williams. And he's got some incredible stuff on there predating his creation of Real Vision. A couple of excellent lectures, just like going to a university lecture. You are literally a professor, and I want to commend you and thank you for the time and energy that you spend helping other people try to understand this game that we are all either knowingly or unknowingly participate in. Thank you, sir.
Yeah, Jerry, you're welcome. And you'll find some more videos of presentations I've done and stuff at my website, which is ttmygh.com. That's for things that make you come. So my letter's up there, and there's more videos and stuff up there that people can see. Some of the more recent ones I've done in the last, the Cry Wolf's up there, and Nobody Cares up there. So you'll be able to see that if you go to the website.
I want to encourage each and every one of you to do it. So thank you, Grant. Grant's coming to us live from Big Cayman. I'm right here in Costa Rica. Until next time, everybody, Pura Vida.
Are you down with OTC? Please like, subscribe, and click the bell to be notified when the next video drops.